Apple missed quarterly earnings expectations amidst concerns that further weakness is ahead due to declining iPhone sales. Futures are mixed ahead of new home sales data and following a report from the Wall Street Journal that the Fed may take additional action for economic stimulus. I'm Taylor Schranz, and the morning call starts right now.
Good morning, I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Scott, the markets have been taking it on the chin the past 3 days, but then 3 o'clock yesterday we get a report out of the Wall Street Journal that the Fed is coming in to do another round of stimulus, a little bit closer than we may have thought previously, and then we also had some central bank action.
I still think they're taking their little jacket pocket and keep going like this.
Right.
And lately that's been enough, especially when you're oversold, especially when you're down minus 65 in the oscillator, especially when you were just at 1380 and we go down to 1330. So a little news piece like that scares some shorts, gets some people in. But, I'd like to see some real action, or I don't even know if the real action is going to have any sustainability as of everything that we've seen.
Right. So as a trader today, do you join in? Because you can't fight that Bernanke put clearly, right? So then do you get back in with the momentum today, or do you just kind of let things play out and find a better spot to get involved in this long term?
Well, I think guys that are trying to maneuver the range over the summer and not looking for follow through are getting rewarded. They're buying at the bottom end of the channel and then they're selling at the top end. And yesterday we actually broke through the bottom end for the first time since the June 4th lows. So the question I think traders are going to have is, can they re-short a test of this area? Now, if you look at here, ever since this June 4th low, we've gone from the bottom end of the channel to the top, to the bottom end, to the top, to the bottom. And then here, we got a little weaker, right? We broke above 1375, but we didn't quite make it to the top end of the channel. So this time, after a 50 handle move lower, we broke this trend line. So I think what traders are going to try and do is they're going to try and re-short coming back into this trend line. If you look at these moving averages curling down, I think if the bears have any control, maybe there's room for some kind of bounce or dead cat bounce, however you want to put it. But I think the smart money is going to try and re-short 1350 to 1354. And if we turn tail there, we could finally get some more action down to perhaps the 200-day moving average. But you don't want to short too fast, because we just pulled in 50 handles. So if you do it too quickly, sometimes you can't hold it longer, or you get squeezed. So I would say bears have control. 1350, 1354 is where they stop this rally, if you could even get there.
All right, moving along to the sector spotlight, we're going to take a look at derivative names that play off of Apple. They reported the quarter last night, missed on earnings, missed by $2 billion on revs. But let's take a look at the Qs first before we break down to the individual names, because Apple is 18% of that particular ETF.
Right, and in a healthy market, you usually see the Qs lead, you see the Russell lead, and lately the Russell's been leading us lower, and the Qs have basically been in line. If you look at the chart pattern of the Qs here, you will see it too, since the low here, has just been riding this channel all the way up, where it's a buy at the bottom end, a sell at the top end, all the way through, where finally, again, this also didn't make new highs at the high end, and now we're hovering right at the lows. It didn't break below because people may have been worried what's going to go on with Apple. So I would say right here, this is 62.51. If you're short term, you're probably playing it versus if it starts breaking below this, your next level is down to 62 or even down to the 200-day moving average. So right now, tech is basically in line, and we'll see what happens with Apple, whether they give it a pass or whether there's more downside to come.
Well, I think what's really interesting with Apple is, and let's take it like you, for example, usually you'll buy some calls into the print, and that was the first time you sort of stayed out of it to see how they printed and to get some commentary off of the conference call. I think what's interesting here, outside of the fundamentals, regardless of what they lost, what's happening on the charts, is that if this is a consumer growth slowing problem, it's a little bit more scary, I think, in the average investor's mind than it would be versus global macroeconomic data, because they can identify with Apple. And this is a trend that everyone can sort of see and follow. I personally think this, for a fundamental long-term position, this might be a gift to get back involved. But how are you guys looking at it from a momentum perspective?
The question is the gift wrapped yet, or is it just getting into the present at this point? It could be retail slowing, it could be global growth slowing, or it could be just that everyone's been talking about the new iPhone, and if you currently have an iPhone, you're not going to get a new one until the new one gets released, because you've already got maybe 2 iPhone 4 or the 4S, and that's the reason why I didn't go long into it, because I was just trying to use my Buffett approach, where I'm like, you know what, I have every product out there. I haven't bought an iPod, I think, in 2 years, and I have my iPhone, and I'm not getting a new one until the new one's out there, and my wife's not getting another iPad until maybe the mini. So everyone's kind of waiting. What does that mean? It means lower earnings, lower expectations. So at this particular point, we put levels in the chart to watch. If you look here, you will see last night we hit the after hours low of 565. That is right here, and we bounced off it. We spent a lot of time around 573. You also have bigger support down here right around this 548. So the question is, the way I judge how we're going to get the price movement for Apple is after a day like today. Okay, so if you come back to me, you will know that basically if the gap doesn't get filled by at least 50%, that means the street's not giving it a pass. That means it's probably going to be out of play. That means you probably could buy it a little bit lower. But if all of a sudden we go from where it is now around 573 and it goes all the way up to almost like 590 and fills a big portion of the gap, that means Apple will be back in its range. Will probably be, the pattern will be intact. You could buy a little bit today. It'll be also a good day trading vehicle. And then I think the major buzzwords over the next month is going to be, do we get it in September?
Right.
Or do we get it in October? Because if the iPhone comes out in October, it's not going to be in next quarter also.
So people, more sloppiness there as well.
So people are going to be waiting for the push out still. So I think it's very key that they get it out in September. A September launch of the iPhone 5 will be much better for the bulls. Today, as an intermediate trader, I'm going to trade versus a level. Just say if it hits a 15-minute low of 568 or holds above that 565, above 574 where it spent a lot of time yesterday. I think you have an air pocket to 582, and we'll trade it back and forth. If you're an investor and you're not in Apple, okay, I say buy a little bit today, but just hold off on a tier or two just in case it has more sideways action, or just say in case there's more downside action, because today might not mark the bottom. But I will say we have not seen a historic top either.
All right, well, that's why it's important you have to know your options. Free little plug here. Only this way you can maximize your, you can look at your risk tolerance and be able to cap that risk. You might minimize the reward a little bit, but you can at least have an opinion going into it and not kind of get crushed on either end, almost like we did with the target trade that you did, Awesome.
Yes, well, risk is premium paid.
Exactly. Moving along to Broadcom, this is one that's had a really tough year. It's up a little bit in the pre-market due to some good earnings chatter.
Yeah, I think that this one's been in a void. Every rally has been sold. You have all these lower highs in place today, almost like a SanDisk type trade. It's gapped up, and the question is, can it hold the gap? So this stock has a lot of work to do on the chart. It needs a lot more. The semis have been weak. If you look here, you will see that ever since this, we talk about red dog reversals or outside days because they lead to something. And right here at the highs here, it tried to break out and it failed. That's a sell signal. And then look at this upper level that broke, another sell signal. And since then, you have a high, lower high, and then it just accelerated down again. So you do have a recent low here to trade against, what is this, around 28.50. I would say, watch it gap up, let it go sideways, and if it can hold that gap after a few sessions, buy it above today's high, and then, at least you have levels to trade against. Kind of like just, I want to show you real quickly with SanDisk. SanDisk also battered and bruised, have gotten crushed. It's not on the sheet. I'm just doing it right now. Giving no reason to own it into the report, but now it gapped up. It held a big portion of this earnings gap, and now it's going sideways. So I think you could be long SanDisk versus the low here of 37.95. So that's a similar type of setup with Broadcom where it's gapping up. It's got to prove that it can hold the gap up. Go sideways for a little bit. I'm using the SanDisk as an example. And after that, you're in tier one. If it ever starts to take out this 41.23, maybe you get some follow through. So for Broadcom, give you no reason to really buy it into the report. Now let it trade above this recent downtrend, go sideways, and then you can go with it.
All right, moving along to Qualcomm. This chart's looking a little bit better, having rallied off the lows of last week.
I probably should have turned to Qualcomm because it was similar, because it gapped up after being broken, after being battered, after being bruised. And if you look here on Qualcomm, similar type of story where this one, gapped up. So if you would have chased it on earnings day, you would have been in the weeds right there. So let me give you a closer look here. All right, so that's why you just don't want to chase it on the open, because you gapped up. If you bought it saying, oh my goodness, Qualcomm's back, let's go after it, you know what, you might not be holding it. So if you look here, you had a nice downtrend, okay, and at least now, you have a point of reference to trade against also. So if this stock's any good in Qualcomm, it should not break below this 56. So maybe buy it here versus 56, and then at some point, if it can go sideways and continue, you could be buying it for momentum above 58.89. But this stock also, technically since the highs, has been making a series of lower highs, technically being up. Finally, a bit of good news on lowered expectations. I guess you can call that good news. So in this zone, perhaps at tier one, my traders are probably not going to touch it until it does some more sideways work and then clears this resistance, which is right around $59.
All right, and before we get into our last chart, I want to remind everyone that we did a webinar on Apple and how to play its derivatives, what to look for from a fundamental basis. Yeah, the charts are over because it's obviously outdated. It was last month, but going forward, it's a good primer to be able to look at that. You can find that on thestreet.com and just look up Apple webinar, and you'll be able to find all those metrics that we review each quarter for all these different names. Let's wrap it up with NUAN.
I like to talk about this because this is one of those concept plays. Every time you have a concept play, you break every technical rule. We saw it in a lot of the social media stocks, which we'll go over later. But this one, everyone said that you have to own NUAN because it's Siri, it's the technology behind the iPhone, blah, 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 that one day Apple's going to have to buy it. But I guess they're going to be buying it a lot cheaper than people thought, because if you look here at the chart, you have not seen a significant rally whatsoever. You had a breakout failure right here. Look at this. Broke out, gap down, never filled it. That was your advertisement that you have to get out. This is what you call a gorilla trade almost. And then since then, it's just been trending down, and trending down. And it's coming into support. I see no reason to buy this still. I'm sorry. I'm not a fundamental guy. Only fundamental people buy stuff into weakness. I'll wait till I see some type of major reversal and better action here.
All right, guys, we're going to take a quick commercial break. And when we come back, we dive into the trenches.
Hello everybody, my name is Pete Renzulli. I'm really excited about introducing you to and inviting you to T3 Live Active Trader Summit. Network and associate with other like-minded people who have a burning desire to learn how to be a trader. There's going to be a ton of great content, strategies, tactics, techniques. Learn to take your trading bigger. Learn how to be a better trader than you are now. Please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.
Welcome back to the morning call. We're going to dive into the trenches and take a look at the social media names as Facebook reports after the close on Thursday. Speaking of Facebook, there's 3 key themes we have to look at here. When they're on the call, you want to take a look and see, is the CEO actually going to show up and give investors a break? What's ad rev like? And the third component is mobile. What are the charts looking at?
Well, it's been trying to consolidate, and it's trying to develop this rounding type pattern. On Cramer's show, I went over it, said maybe it's ready before earnings. It didn't happen. Got stopped out, very limited damage. If you look at the chart here, you'll see ever since the day it opened up, it followed every sell rule from closing on the dead lows after not being able to get over the opening range to then putting in a bear flag that gave you then continuation to the downside. Then you had your little red dog reversal right here. Then you had your follow through, at right around this 28.10, and then this is when it started to look better before it broke down again, because people are very concerned over what's going to be reported, how are they going to present themselves. But I think so many people are so concerned that maybe, no one wants to own it and it can go higher. I'm not going to take it long into the report. What I'm going to do is wait. I think one level you have here is 30.50. If it starts getting above 30.50, it's got room to 32, but it really has to clear this downtrend that has been controlling this ever since it was issued. So I'm going to wait. If you have to be in some, be in very small. I really wouldn't be shorted even if it goes lower, just because there has to be so much protection. But if it does open lower, make sure the low of the historic low here actually is 25.52.
Well, moving along to ZNGA, this is a name that is incredibly tied to Facebook forever, for that matter. So I think what a lot of investors and traders are asking themselves, is there any value in this stock as a standalone? So Facebook has a great quarter. This one's definitely going to move on that. And if it has a bad quarter, well, that's also going to really be testing some key support here. I mean, where is it at now? Like 4.5?
This stock hurts so many people because, again, the thesis. I remember when Facebook was like 2 months away, 3 months away, every sell side guy that I spoke to said ZNGA will, I don't even say if they said if, when, will be 18 to 20 bucks by the time Facebook comes out. It has to be. So a lot of people broke a lot of rules. I actually played it many times. I got a little nicked up, but I didn't just cost average in. But a lot of people, got put out of business listening to a thesis. And if you look here at the chart was really very tradable. Okay, here was the opening when it also failed at the new issue. Went all the way down, finally, did a rounding type bottom, almost even like Facebook. So here is, maybe buy number 1, and then here was buy number 2, and then here was buy number 3 when it broke above the opening of the new issue. Okay, then it went sideways, and this is when, look what happened here. Big analyst expectations. I think they came out with games on their website, whatever. Boom, it was sold. Sell signal right there. This is a shooting star top. This is an outside day. This is a red dog reversal. You name it. This is get the hell out of the way. Okay, and if you didn't, once it broke below this range here, I remember because I said I tried getting long, I think, on this green day, and then once it broke below this 1125, that was your way out. So if you had a thesis, you sat in there, you got upset, you got tired, you got upset, whatever it was, you're not happy. And then once again, and when it broke below 7, you also could get out of the way. So now fast forward, where are we? Holy cow, we're at 492. I don't know. I think if you do not own this stock and you think that, I don't know, that it's going to stay in the game, and it probably does, but again, it has an unproven business model. The valuation is still too high, but down here, I wouldn't be short. Don't be short going into Facebook earnings. Don't be short this stock looking for the juice going into its own earnings, but doesn't mean you have to be long. It'll gap up if it's any good, and then from this lower level, you should be able to catch a gap and go if you want to be involved after the report.
Moving along to LinkedIn, I feel like this is one of those names that might have the most clout out of all them. Like there is some sort of model there. There's an announcement yesterday that Microsoft is going to integrate it into its Office platform going forward. So I feel like out of all the social media names, this one sort of has a little bit more street cred, if you will.
Well, this one's also been public for a longer period of time, and the last 2 earnings reports were actually good. And a lot of people actually do use them. They use them for recruiting. They have a nice system. They're actually earning money, and their valuation wasn't in the trees like Facebook. Okay, they have a lot less shares out there. So at this particular point, I still think that this IPO, this new issue, at someday, could be a lot higher, 180, 220. Okay, but it's got to clear 110, 115 first. So a lot of institutions have been behind you. Look at the chart here. We've had a lot of good trades here on this show with LinkedIn. If you look at just say go to the weekly chart first, you will see that it's been in the game. It's traded with some nice little patterns here. It also, after there was actually a few good days in trading the IPO, when it broke this downtrend. Okay, here was a nice trade here at 80. Then it traded above this level of about 90 and change. Gave you another nice trade. It was sold on last quarter's good earnings, and now it's wedging once again. So I do think at this point it's at a little bit of an inflection point. If it could report good earnings again and go 3 for 3, if it gets above 110, that's when I'm buying it. I'm not buying it until it can clear 110 after earnings, and if it does so, it'll be in the game to make new highs, and I think that institutions are behind it. It would be good for this market if it continues, because it'll show that you can get some growth and some excitement at newer companies with more innovative models.
Right. Moving along to quick hits or some quick cash, we're going to kick it off with 2 banks. Obviously, the financials got a big yesterday following the Wall Street Journal report that the Fed is going to inject some more market manipulation, stimulus. Let's kick it off with Goldman Sachs.
Goldman Sachs, it actually showed relative strength yesterday. The whole day it was up like 80, 90 cents while the
banks
markets
were
were
really
making
active
lows.
way before this too. I remember the European ones, Deutsche Bank, the options were off the charts. So, I mean, I don't know if that was a telltale sign or if it was coincidental, but
it could be something,
yeah.
But it could be just a trade. It could lead a little bit more. But this whole sector still has been battered and bruised, and Goldman has been hanging on to this 90, 60 to 91 area by a thread. You look at the chart here, it's been in a downtrend, it's been broken. Here is actually like the major downtrend, comes in up here, and then you have, which is all the way up there, and then you have another one, this is the weekly, that comes all the way down to about 120. Now, if you go to the daily chart, you will see that the stock just has been under such pressure. Like it came out with earnings and finally looked, I remember saying, if it could stay above 98.50, 99, maybe you could see a move to the 104 area. It failed on earnings day. You never want to see a stock fail on earnings day. That means you have more downside coming. But what did it do here? It held this major support. So at this particular point, I think that this 95, 96 is going to be a pretty big level, because if it gets contained here and moves lower, then it's in the cards to potentially break this big support. But if it comes right back through there, it's just more of this monotonous channel type trading until we get to, I guess, another point this year where maybe it'll resolve. But right now you have defined resistance. The resistance defined support is a trade. It was strong yesterday. You're probably getting paid for holding it overnight. But after 3 days in Goldman Sachs, I would not chase it long.
Well, what I think is really interesting with the financials, and I think you're going to see some movement off the headlines today, of Sandy Weil on CNBC this morning saying that the large banks should be broken up. And ironically, he was the architect of these supermarket banks. So moving along, it's almost like Greenspan coming on and telling Bernanke what he should do.
Right.
So I just find that kind of ironic. So moving along to his almost his protege, Jamie Dimon and JP Morgan. I mean, he's got to be sitting there right now like, really? I mean, it's one of the reasons why he left Citigroup was because he felt like it was getting too big.
Right.
So let's move along and take a look at JP Morgan and see.
Well, this one too, it's just maneuvering the bottom end of the channel. Every time it looks good, you have to sell it. Every time it looks bad, you buy it. And it's still trying to work off, obviously, the London whale news. And if you look here, you'll see that it also, after earnings, had that, remember that Friday catalyst day, it gapped up and then gave it all back. and then it opened lower on the day that everyone wanted to press the banks. And now, I would say it's still in this lower range. I think you're in a tier 1 at best if you have to be in any banks, and there is somewhat of a downtrend being put in place here, that if you were short against it, there will be some spots for them to potentially get worried. And right here, you're coming into it. This level right here is, I believe, what, 35.23. Above 35.23, your next level is 36.20, and then you have that major level right around here that's now moving lower to about 36.50. So at this point, it's getting tighter, and it's showing a little bit of a constructive pattern, but I would not be in more than a tier 1, or if you're looking to trade it, don't be chasing strength here, because strength has not been rewarded buying any of these banks.
Moving along to Chipotle, this is a name that we've been getting more constructive on to the long side on options profits. We're actually selling some put spreads here, as we think that, the premium totally shot up as the volatility shot up following the earnings report, because that was just a horrendous few days for the stock. So it looks like people are getting a little bit more constructive as the news has sort of played out.
Yeah, actually, I think I saw that late yesterday. I got an email text saying, sell a put spread before today, and today it got upgraded.
Yep.
I'm not sure who did it, but someone upgraded the stock. And it's good to finally see an analyst upgrade a stock after it's been battered and bruised, not upgrading a stock when it's a few dollars away from making its all-time high and at a top. But anyway, this stock has been on our off the charts as a problem stock. It technically started showing damage. It broke a few trend lines and gave you some clues not to be in it for earnings. And we typically don't take stocks into earnings because of this situation. That's why we use options. You look at the chart here, you will see, look at this uptrend. This uptrend broke right around here, right in April. That was one reason to get out besides the choppiness up here. Then it went sideways for a while, broke another uptrend. And remember this day when it had a potent, did I say potent? A potent down move, engulfed this entire range. That was your way out. And then all of a sudden, had a little bit of a bounce back. I think Goldman Sachs was the culprit. I think they upgraded it right around here. I guess, maybe they wanted to get out of stock. So PS, you have a huge gap. It's now down 3 days in a row. I think it's still got so much to prove, but as a trade, there's no reason why at some particular point it can't work its way back to 323, 34. If you want to trade it against the level, trade it versus this 292 low, which is now your new point of reference, because it's probably up a little bit with that upgrade.
All right, let's take a quick look at IBM. I love this one for long-term position. I think it's a great core portfolio holding to have. That nice, healthy dividend. They're always doing share buybacks. It's been beaten up a little bit on the chart. So how are we looking at it from a momentum trading perspective?
I don't think momentum traders are looking at it. It's just, it had earnings, it had a 2-day move, and now it just needs to consolidate. I think as an investor, you could have tier 1 in IBM, don't have any more than that. I think they have a lot of European exposure. I think they have a lot of exposure to our public sector, which needs to be, strained in. So at this point, if you want to buy weakness, fine. But right now, there's been no momentum in IBM for a while. All
right, Toll. We have new home numbers coming out at 10 a.m. Eastern today. Home builders were actually on quite a move, although they were the most beaten up sector yesterday. Let's take a look at that one.
This one still continues to be a leader. The home builders have been a place of strength. They've been a place of strength all year. So you always want to be where the strength is. And this one, at this point, I would not chase it up here. You've had some move already for this entire year from the low in September all the way up to this area. Yesterday, a little bit of an outside day as it tried to break out and came back below it. If you're in this one, I would just say have a high level stop. If it starts to break below this 28.80 or 29, just sell some, because again, it's been such a leader. It's had a long move, but if you're in it and you're trailing it, it hasn't really given you any signal to get out yet. So at this point, the same way I want to have lower level stops, I want to have high level stops. Here's your stop on Toll right around 29. If it doesn't get stopped out, continue to ride it, and trade it.
All right, let's wrap it up with Netflix. Again, this one's having some concerns whether or not it can meet some key growth targets.
You think?
That's an issue.
Right. Well, this one's been broken, but it's been a great trading vehicle. Someone should look in and see who planted the story about the $1 billion download.
What do you always say? Someone else's trash is someone else's treasure. So even though it's horrible for the stock, it's been great for you guys in terms of trading it, and you've made money off of it.
Yes, and the last buy price was $70.50. But we again also don't take stock into earnings. And even yesterday on the morning call, I said, Apple, if you long it and it goes lower, you'll probably get a pass, and at some particular point it'll be higher. You'll be fine. I'm like, Netflix, not the same story. It's a broken stock. It's only a trading vehicle. It's not an investment. And if you look here, just from historical terms, this too, remember how it was a high flyer? And just if you want to see the chart and show you when trends changed, all you had to do is draw this line here, right? You drew this line here, and You had one here, and it broke right around there, and then it broke this key support around 250, and then it broke key support again here, and ever since then, just been huge decline. Anyway, you go to your daily chart, and you will see now that, it just, it gave you a nice 2-day trade, which is great for active traders. Then it tried to go sideways, and, disappointing results. It's all the way back down to 65. Maybe you get some kind of activity trading it today. We'll see if it could fill any portion of the gap. But at this point, as an investor, I don't think you touch it. This stock will be talked about again probably as a takeover target, but I don't think that happens until it's in the 50s.
All right, guys, we have a full plate today. We have a ton of earnings coming out. You're going to see a lot of whippy headlines following that Wall Street Journal report and also some central bank action. So catch Scott at the end of the day. Real money, options, profits, and T3Live.com as he takes us through the charts.